Happy Friday, everyone. Welcome to the Wall Street Blockchain Alliance's Crypto Roundup, Friday, December 12th, 2025. Ron Quaranta here on the wrong side of the screen with my wonderful friends David Brill and Joshua Ashley Klayman. Good to see you both. Thank you, everyone who's joining us on LinkedIn Live, on X, and on YouTube. Before we begin, our usual disclaimers. Obviously, nothing discussed is business or investment or legal advice. David, we've got a lot of token items to talk about today. And then what the three of us are talking about really is our own personal opinion, not necessarily the opinion or commentary of our respective firms. David, Josh, we're approaching year end. I was joking with you, David, that it feels like things should be slowing down. I'm getting the sense they're not. There's a lot to cover. David, let's kick it off. We got a 25 bips interest rate cut. Bips, for anyone who's out there on Wall Street and remembers what I'm saying, basis points. It didn't seem to do much.
No, it's one of those things. I think it got priced in. Everybody saw it coming, and everybody's super curious to see what comes next. And I don't think we got a real picture of what we might get coming forward. I don't think a January cut looks imminent by most people's imaginations or what people are saying. So I think it was sort of, buy the news and, the news is already out there, and sell the news, buy the rumor, sell the news.
David, let's plow into that a little bit. And you and I and Josh have colleagues that monitor this stuff almost as much as we do, which is absolutely frightening. But when we look at the Fed's policy and how things go from risk on to risk off, David, one of the things I spend a bit of time looking at is the commentary after the interest rate decision. There's a whole bunch of Fed governors who think we shouldn't be cutting interest rates. Are you worried about how political some of this is and how that impacts the markets? Careful, David.
That's a 100-mile-an-hour fastball on a Friday afternoon.
What I'm here for.
I would just say that lack of consensus doesn't mean that we're not going to move one way or the other. That I think it's healthy for there to be divergent views. I think it's an interesting market. Inflation is still higher than we want it to be. And maybe if we just all agree that inflation, like the baseline is going to be 3% going forward instead of 2%, all this mental gymnastics would go away.
Yeah, fair point. Josh, I've got to imagine that we've so ruined you that you think about things like 25 basis point cuts from the Fed. I'm just curious about your opinion.
So it's really a question for you guys. And maybe this is having like a bit of skepticism, or maybe that's the wrong word. But, this talk about whether the 25 basis points cut was already priced in. I remember a few weeks back, although maybe it was longer than that. Some weeks feel like lifetimes.
It's all a blur.
Yeah. But I remember a few weeks back where people were kind of blaming some of the market turmoil on uncertainty around whether the Fed would have a rate cut.
Yeah.
So which is it? Is it both? Is it one? Is it the other? Like,
it's you know what, David, like to Josh's point, the market perceptions are Schrodinger's cat. It's both at the same time sometimes. And Josh, you make a really good point, because I think it was about 60 days ago or so. And David, I think you and I chatted about this not too long ago, where market participants were saying, well, the Fed's not going to cut interest rates. The estimate on Kalshi or Polymarket is there's only a 40% chance that they'll cut rates. And then someone, let's say it, David and Josh, revises the data, and suddenly becomes 85% chance, and then no one gives a crap. I mean, it's a really good point, Josh. It makes me often worry about how quickly market sentiment moves. And that's just not in our world. That's not just crypto assets broadly. That's, David, in the day-to-day world. I have friends that are like, maybe I should refinance my mortgage. I don't know if you should.
I don't know. Now it doesn't feel like the right time to refinance a mortgage. I mean, unless your arm is up and you just have to, this doesn't feel like the right time to do that. I mean, look, we have some, you were talking about housing. We have some intractable issues.
Yeah.
I keep reading that, like, it's a weird dynamic. It's like, I read somewhere foreclosures are going up, but then, people can't buy because the interest rates are still too high to get a mortgage. there's this weird dynamic in the housing market that's playing out. And I think just assets continue to get inflated or go up in value. And I think one thing that is a little concerning is that I think if people aren't in the stock market or own hard assets, they're really falling behind and continuing to fall behind.
Yeah.
And so I think that's problematic when you just sort of look at it like big picture.
David, it's a really good point. For everyone in the audience, thank you so much for joining us. If you've got comments or questions for David or Josh or I, please put them in the respective chat. David, Josh, to that point, when you bring that up, I had read something interesting, and it makes me worry about something we've discussed before, which is kind of, and we hear it a lot, the K-shaped recovery, where it's the top, call it 10%, are doing really, really well, particularly as assets hit all-time highs, and the bottom, 10% or more is doing really, really poorly. David, I think I'd seen a data point that around the Thanksgiving holiday in the U.S., something like 40 or 50%, probably wrong, bought everyday goods, including food, on buy now, pay later.
Wow.
And I think the Journal quoted that. Someone in the audience might know better than I. But again, David, that doesn't bode particularly well, given some of the things you and I are seeing.
No, and it's a little ironic in a way. Not ironic, that's not the right word. It's a little disconcerting because we've talked about it, like credit card delinquencies are up, cars are being repossessed, foreclosures are up. It does feel like there is this, market for the top 10%, and then the bottom is really getting hurt. And, I know that there's a plan. I mean, I know that there's real focus being put on this, but right now it does feel that way. And it's unfortunate. It's a little disappointing, but I know the powers that be are working on trying to fix that. And I think there's a lot of focus towards it.
Josh, we often joke, and I'll apologize out of the gate. I often joke with you all, and we do it together as friends, that, Josh's next mansion or David's next yacht. But are you seeing some of the same things that we see, where people that I didn't think were going to have challenges are now starting to have challenges?
You mean with buying homes, or
with
just in general?
Generally this kind of lopsided economic activity?
I mean, I'm not
left her speechless.
I don't know. I mean, I'm not sure that people are necessarily confiding in me if they are, right? Because maybe they're doing the buy now, pay later.
Yeah, fair.
So I think, but I do know, like, at least with what I've been seeing in New Jersey, the insurers, and I think that's been a gating item for people getting homes, is insurance requiring, really stringent, like, I think they want people to have like roofs that are no more than like 15 years old and things like that. I mean, all of that has an impact on the buying and selling of homes and stuff like that. I mean, I don't really know though as to the other point, but I will say, I just during this time I went back to look at when the Nvidia earnings came out, and that was like November 19th or so.
Yep.
And that it was post that when we got that little bump, right? Because remember before that there was the scary words from others about AI being too bubble-like or too overblown. And then Nvidia came out with its earnings, did really well. Although I know you and David had some insights about, what could be behind the curtains or in the future.
Yeah.
Not in terms of the AI itself, but just in terms of
I wish, but yeah.
The earnings. Yeah. And I think after that was when I think I still heard when people weren't saying, well, why aren't things better? Then people were saying, oh, well, because, uncertainty, like the rate cut. That's why the thing about, is it priced in? Maybe it was priced in like as of the past few days, but was it really priced in as of the past few weeks? I don't know.
Yeah, I think in my mind, David and Josh, the priced in happens relatively quickly. It's not priced in and then it's locked in for 2 to 3 months. It's priced in, and next week it changed because we've priced in some new information. David, Josh raises a really interesting point, and I'm having this conversation more and more. Going off script, you brought up AI. First of all, let me say this, David. We've gotten her to watch earning reports from technology companies. I'm so happy and I'm so apologetic at the same time, Josh.
No, I'm thankful. guys.
But David, one of the conversations I had the privilege of being at an event where I spoke in DC on a slightly different topic, but the topic that came up most often for us was AI and crypto.
Mm.
David, how tightly tied is the crypto asset world to what we broadly call the innovation cycle, right? Tons of money is being thrown at AI. That's great for risk on. That's great for innovation. That should be great for crypto. Is that kind of a myopic perspective?
I think a lot of the money that's gone into AI might have gone into crypto before.
Yeah. So it's a rotation.
Yeah, and I also think that some of the companies that were, crypto data centers have been pivoting to AI, and some of those, companies have done really well this year. So I think AI might be, taking some of crypto's, liquidity, and it's being put towards there, because I do hear people say to me, well, should I buy crypto, or should I buy, AI data centers or some AI stocks? And it's a good point. It's a fair point. What really concerns me as we talk more about crypto now is, the altcoins have really just been out in the woodshed and have just, been lashed all year pretty much.
Yep.
And it's, it is a concerning, because in some ways the altcoins are sort of like the next generation of innovation in crypto.
Mm-hmm.
And we're not really, we're seeing movement in some of them in terms of what they're accomplishing, but we're not really seeing that reflected in how they're trading.
So, David, that's an interesting point. I shared with you both a data source that I had read earlier. Shall remain nameless. We all see different opinions and different perspectives. And I'm starting to hear the rumblings, David, of, well, there's a rotation out of Bitcoin into the alts. I don't see that, David. And I'm trying to understand why that perspective might be out there. There seems to be a broad, the leverage is washed out, it feels like, in the crypto markets, in large measure. But I don't see a rotation back into Bitcoin. I see it in gold. I see a rotation out of some of the AI stocks, honestly, that Josh referenced. We hit an all-time high yesterday, but I think the tech heavies were down on the day. Where's the money going, David?
Well, look, in previous cycles,
where's your money going? Listen, when David buys or sells, I panic, Josh, because I got to be watching.
So in previous cycles, it used to be people would take their gains in Bitcoin and then buy altcoins.
Yeah, right.
But now you have ETF buyers who are just buying Bitcoin and holding on to it.
Yeah.
The sellers have been like the OG sellers who've had Bitcoin for 5 or 10 years. So we're not seeing that liquidity move into the altcoins. And then some of the liquidity for altcoins went to DETCOs.
Yeah.
Not all of it. So I just think, unfortunately, right now, we're not really seeing that. And I disagreed with some of the analysis that we saw today. I kind of think that, we might be headed for another leg lower, unfortunately.
To where? Again, not investment advice, but just I'm interested in the numbers.
Like, I don't know if we don't hold 88.
Ron has his finger on
Yeah.
I'm ready to hit sell here.
I think we're in a range between like 85 and 95. But boy, if we start pushing on the lower end of that range, 80 or 78 could be in the cards.
This is what I get for telling Josh I've got a trading terminal right here.
But you know what? I think here's where I want to make a segue, because we've talked about this. As pseudo bearish we might be on like the crypto assets right now.
Yeah.
Like, we should be super bullish on all the regulatory movement that's going on right now.
Yes.
100%.
I'm just skipping ahead in the script, Josh.
I was making a list of things this week that have gone on, and there's a lot. We could spend like 2 or 3 hours talking about all the things that happened, but I'll lead in with what just came this morning, that there were 5 preliminary trust charters that were granted. Mm-hmm. To Ripple, BitGo, Fidelity, Paxos, and Circle. And that is really big news.
Yeah, David, you softballed this. Josh, I was coming to you next. For everyone in the audience who knows, Josh chairs our legal working group and usually focuses on everything there, but really a focus on the legal and the regulatory. Josh, were you surprised at how quickly some of this news is coming out? There's other news as well we need to talk about from the SEC, no action relief, but I would love your thoughts on how important this is for the ecosystem.
I think it's huge. I think it is huge. I mean, I think that, after having such a quiet period, or in terms of what is allowed for banks in the past, and crypto. I mean, earlier this month, what did we see happen? We saw the House Financial Services report, right, about debanking and Choke Point 2.0, like putting it into print that this really happened, right, and saying that this is changing and it will continue to change. Then earlier this week, we saw the OCC with the announcement about banks' ability to engage in riskless principal transactions involving crypto that are securities and that are non-securities. Then these trust charters. Then yesterday, the SEC's announcement, the Division of Trading and Markets, no action letter for DTC about tokenized securities platform, like, or infrastructure. I mean, I don't know. Am I surprised that it's happening so fast? I don't know if it's fast or if it's slow, but it's all at once, it seems.
Yeah. It feels like there was a lot of pent up activity that got delayed because, and I'm just going to say it, the government shutdown, I think, Josh, certainly delayed some of the action that we're seeing. And David, just come into this part of the conversation. When we talk about what Josh just referenced, no action relief to DTCC, for those who don't know, DTCC facilitates trillions of dollars in transactions and securities in the globally every single year. I don't think we can overestimate the importance of that, David.
No, and picking up on what Josh said, it does feel like everything everywhere all at once.
All at once.
Yeah.
Yeah. No, I'm agreeing with you, Josh, and I think the DTC thing is a very big deal. Look, I was a GC of a transfer agent. We still had paper certificates. I used to get phone calls. People needed legends removed before M&A deals got done or subsequent to them. I mean, now we've come to this place now where they could be tokenized, and the leverage in the system of how to move things along quicker, and also for capital purposes and for collateral purposes. So, I mean, I think this is great. I think I heard somebody say the last couple of days, the only thing we have to be careful is be careful what you wish for, because it does feel like that TradFi is starting to move is starting to muscle in a significant way on the crypto side of things, and that leads to another thing where now institutions banks can be riskless can be riskless intermediaries in transactions, which means that they could act as OTC desks for crypto transactions. So there's a lot of movement, and we're seeing it happen really everything everywhere all at once.
Yeah, Josh, you were going to say something, and I cut you off a bit earlier. Go ahead.
Yeah, I guess one of the things I'm wondering is, and maybe there's not, I'm sure there isn't causation here, but I'm just wondering, it's just an interesting trajectory or lack thereof, perhaps. Let me stay away from big words for a moment. We talk about the altcoins, right? And how they haven't really been performing. Like, they're crypto native assets, right? That are different from traditional securities. And what we are seeing with the tokenized traditional securities, right, and these tokenization efforts, it's just really interesting. It's quite different. If I think back 10 years, right, in the space, I don't know. I thought that the banks were going to be so far ahead, right, with smart contracts and doing all these sorts of things. And so the ICO boom to me was like a huge surprise back in the day, right? That sort of went in that direction. But now it seems almost like, not that there's a switch, because obviously I'm a big believer in crypto and altcoins and not just the coins, but the projects behind them, I should say. I don't necessarily believe in any coins, right? Themselves, just their code. But yeah, the ideas behind them. But I wonder whether, the fact that we are seeing TradFi take over. I'm just thinking about what we're seeing in each area and whether that might have anything to do with why people aren't driving up the prices of altcoins.
Can I?
Maybe I'm out in left field, which is
no. I'm with you. I think I wanted to add one thing to that, Josh, which is, and it feels very much like the banks have woken up to the opportunity that some of this represents. I mean, the three of us and so many colleagues have spoken about, banks will fight, and there are some bank organizations, for example, David, that are still fighting this tooth and nail. We'll get to that in a minute, but it used to be they're going to fight this tooth and nail. You can't disrupt the franchise of what banking is. Now it's, this is banking for the next 100 years. They're finally getting it. David, is that an accurate perspective in your mind?
So I've been really thinking a lot about this, and I'm going to have a few ironic takes for you.
Love it.
So one of them is I truly believe the U.S. is 4 years behind where we should be. And I've said this before, both at our annual symposium. I've said it on our podcast that I think that the last administration really set us back 4 years.
Mm-hmm.
But I also think that the last administration inadvertently allowed crypto companies and infrastructure offshore to continue to develop and prevented banks and regulated entities to work and develop this. So in some ways, the crypto companies got more of a head start, but now that we have an administration that is supportive of crypto, the banks are running twice as fast to get and catch up.
Yeah.
So I think there's a little bit of that's going on.
Mm-hmm.
But I also think that there's some subtle things, like I think having it, because we have issues, with the UI, UX, and self-custody, a lot of people are like, I want exposure to Bitcoin, but I don't want to worry about it being, I don't want to have a hardware wallet. I don't want to worry about getting one of these phishing attempts for a crypto exchange. And you know what? I'm just going to buy an ETF. It's going to be in a safe place. I don't have to worry about it.
Yeah.
There's all these dynamic currents that are going on, and it's sort of playing into where we are right now.
I mean, David, to that point, the one last thing I'll add, when we look at the names that are in the queue of news that we've seen recently. So, Josh, you referenced OCC and the bank trust charters for these participants in the crypto space. Last week, I think we were all talking about the news, David. We've seen Vanguard, Charles Schwab, and these others beginning to allow, announcing for 2026 that will allow clients to be able to gain access to Bitcoin and I think a handful of the most liquid. Has that tide turned? I mean, David, you and I have used the phrase wirehouse for the past 8 straight years. It feels like the tide should have turned, but I'm still not seeing what's holding it back.
Well, look, I think the tide is turning, but just because the banks suddenly flip the switch, the FAs have to talk to their clients.
Yep.
Maybe there's some funds that get rebalanced, but we still don't have full exposure in retirement accounts where a lot of the assets are held. So there's still a lot of things that still need to move forward. But I think that the banks are a little lucky somewhat in that, like, we've seen this price retracement. So if they start recommending it to their clients, they're sort of getting it 20-25% less than where it was.
Mm-hmm.
So they kind of look a little better about doing it.
But there's also a public perception to this, meaning the average everyday customer, Josh, will be much more comfortable going to their broker at Fidelity or Vanguard or Charles Schwab. And again, this is not negating the companies that exist that really facilitate crypto. They're much more comfortable with that conversation about getting into a new asset than listening to Ron talk about hardware wallets, for example. And David, I still have PTSD of beating up on the hardware wallets you and I have had in the past that were just such a pain in the neck to work with. Josh, like that perspective, it's just easier, more comfortable for people, I think. Or it's becoming that. Would you agree with that?
I agree.
Yeah.
I feel like I'm asking Josh dumb questions. And at this point,
no, not at all. No, but
for you, Ron.
No, I mean, I think you're absolutely right. On the other question about whether I'm seeing like other people struggle, I mean, that was more just, that wasn't a dumb question either. It was just sort of like, not really.
Yes. In those bucolic hills of New Jersey,
No, I mean, I'm sure people are, but I was trying to think of like personal anecdotes that I could share, but no one is sharing that really with me, except just complaints about like, oh, it's hard to get a mortgage, which I believe that it is.
Fair.
I do think user experience, user interfaces, they're improving, and I think people are, even if they're not improving, people are figuring it out.
Yeah.
But one thing I want to add, Ron, is that just because also some of the banks are letting the clients have access, it doesn't mean that they're strategists or the people who, are at the top of the house are like supporting it.
Yeah, fair.
I probably Vanguard has probably just realized that so many people want access that it just didn't pay to stop people from getting access. But I don't know that they full-throated supported buying crypto. So
listen, like a couple of strongly worded letters from a David Brill gets these brokerage firms to move, Josh.
Hey, if they moved a couple of years ago, like we talked about, they really would have had some sizable gains.
That would have been a nice bottom line item for them.
Fair enough. But look, I still see the irony that from a regulatory standpoint, we've really made a lot of progress this year. And it's just interesting that the price hasn't necessarily reflected that. But maybe over time it will. And
I think it's some of the uncertainty that we still see in the marketplace, including some of the uncertainty out of the government, David. Go ahead. I cut you off, please.
No, the other thing I was going to say is I think because the last administration was so negative on it and people were like, oh, these are securities, or like regular people who would look at it from afar would be like, well, if the SEC's not supportive of it and the administration's not supportive of it, maybe I shouldn't be investing in this. And so I think it's still going to take a while for people to, get comfortable with it. And even if they get FA's advice, maybe there's just some people who are like, you know what, I'm going to wait a while and see. And this is the other part of the 4 years that we probably lost.
Yeah, no, agreed. David, you used the word irony. David, Josh, I've got to raise it to you. When we saw the news about the SEC, no action relief for DTCC, and some of the other pronouncements from the SEC, including things like dropping certain enforcement actions, and we can have that conversation. There was a bit of irony to me, David and Josh, reading broadly in a speech an SEC commissioner's, I'll broadly call it dissent. And I'm just going to say this more provocatively than I mean it to be. There's a certain amount of hypocrisy in my mind complaining about the regulator doing these things in the dark. And Josh, I'm paraphrasing some of this, or not really thinking through the implications and kind of those were the complaints that were made in the previous SEC. Were you sort of surprised, Josh, by that level of dissent?
I mean, I think that as was stated in one of your posed in one of your questions to David about the politicization.
Yeah, I struggle with that one too.
Of certain of these topics. Yes, I was surprised. And yet I wasn't surprised.
Why?
Just because,
we've seen this before.
Yes, exactly. Although I have heard, I don't know where this rumor has come from, and it is a rumor, unsubstantiated rumor, but I've been hearing rumors that Elizabeth Warren is going to flip on crypto. Sorry, that just came to mind. I have
hold on a second. I gotta hold on to something for a split second. You and I are gonna talk about that offline, because that brings me to the next item up for bids in our conversation, Josh, which is, we've talked about, we haven't gotten to market structure, but it looks like Senator Warren and some others are really pushing back on any kind of market structure legislation. And David, I'm going to ask it, why do unions hate crypto suddenly?
I have to tell you, if there's any time where somebody should stay in their lane, like the teachers unions, with all the problems we have with schools in the US, talking about, oh, we shouldn't have a market structure bill. Like, really, you should have taken that money and effort and focused on like fixing our public schools, because literally I think my blood pressure went up 15 points when I read that letter, because look, like educating our children is so important. And I think universally, whatever side of the fence you're on, politically, it's been really a rough sled the last few years. For them to waste time and money to have written that letter, or even if it was ghost written for them and they put their letterhead on it, it just was breathless reading.
Josh, I almost feel bad impacting David's blood pressure. David, I will say this, I'm with you. And I think when I saw that Greenpeace signed off on the news, like, really? This is now what Greenpeace is focusing on? No, all due respect to people at Greenpeace. What are you thinking?
I mean, yeah, there are not enough words to cover the feelings I have about all this.
Josh, please calm us down.
Well, one thing I have heard is that whether or not this is true, but so again, unsubstantiated rumors for everyone, is that many in the House feel that they had to accept the Senate version of Genius, and that the Senate should be accepting the House's version of market structure. So I've been hearing rumblings of that. So I don't know whether that's true, whether if true, it means anything.
I feel like I've got to reach out to Adam Goldberg. If you're watching, buddy, Adam does a lot of our policy stuff. He was our guest at the last roundup. Let us know if Josh and David and I are on the right track. But no, it is interesting. I want to throw this one last, and I
have one more thing to add, Ron.
So you do that first, David, because I'm trying to get my words in order.
I think it was necessary. That order was necessary in order to get Genius approved. But I think it's going to be that the House is going to have to accept whatever the Senate compromises on clarity. I think the House is just going to have to accept that. I think that, and Adam alluded to this too, but I think that the administration is going to lean on the House, that if we get a deal in the Senate and we get the 60 votes, that the House is pretty much going to be strongly encouraged to accept what comes out of the Senate. Yeah,
David, agreed. And there is a very well-known tech entrepreneur, I won't name because some people love him, some people hate him, whose perspective is that the most ironic outcome is the most likely. David, Josh, ironic outcome of the century, the head of the anti-crypto army flips in 2026 and supports crypto. That will be the most ironic outcome I could possibly imagine.
I mean, look, I need to see it to believe it. And even if I did see it, I'd wonder if it was like some AI that created that. And I'd still need to triple verify it. But I'm going to go back to something we've all talked about. The money that was raised in this last election and the effects it had and the ongoing effects of the money raised and the influence, I think has been really important in moving legislators to become either at least open to it and willing to listen with a clear pair of eyes, or at least not to be so against it, because I think we saw how effective it was.
No, totally agree. And again, we are coming into an election year. Josh, alluding to your point, it might really make sense for certain people to become more supportive of crypto, especially if they can get some of the concessions around consumer protections that they've been talking about. Whatever that looks like and whatever kind of compromise. We use the word compromise for politics, David and Josh. Who would have thought it?
I mean, look, ultimately, this is a technology ultimately, and this is certainly I'm not the first person saying this, obviously. This is ultimately a technology. This ultimately, ideally, wouldn't be so partisan, and it's becoming less partisan. But ultimately, this is to make us competitive in the banking, in the global financial ecosystem. And so regardless of people's hardened views in the past, I think you have to look and see what's being done now and the benefits of it, and try and get to a place that's reasonable. I've never felt the need that one party needed to be the champion and the other one dragged along. And really this time around, it's really more more consensus and more, like Josh said, cooperation.
David, one last thing I'll add to that. We have colleagues and friends in different parts of the world, Singapore, UAE. And I think part of that kind of calculus, David, is they're also looking and seeing at the kind of galloping ahead of innovation in certain of these locations and realizing U.S. needs to keep up. I think that's part of that kind of dynamic as well.
And also, look, we've been in it long enough. Some of this isn't that complicated.
No.
I think some of the issues ultimately, if you think about the issues remaining right now, it's not that complicated as far as what the issues are. It's just how entrenched the parties are on their views of those issues.
Yeah.
We know how to do AML and KYC. It's to what extent we think it's necessary.
Yeah.
And so look, I mean, I know I'm oversimplifying in some ways, but look, the ethics issue that's bouncing back and forth. I mean, other industries have ethics rules.
Mm-hmm.
I don't think these issues are intractable. It's just people have to come to some sort of consensus around them.
Yeah. And the outcome of all of this, David, is that my wife's getting me a blood pressure machine for the holidays. You might want to get one.
I say, if I see anything else from the teachers union, I really think that head emoji that goes like this, I literally thought it was an onion kind of like post on X when I first saw it. And then when I realized it was real, I was just like, I just can't.
I'm sorry, buddy. I had to raise it. Josh, go ahead.
So one of the things that hopefully this will like smooth out your
Lighten the mood.
lower your blood pressure is one of the things I've been thinking about with respect to the DTC no action letter. I think back many, many years ago when we were all friends and all already doing this. But if you remember with Andrea Tiniano and the Delaware Blockchain Initiative, and then Caitlin Long and Mark Smith, right? Back in the day.
Yep.
I remember that there was a lot of focus, even in terms of like why you would want to have the Delaware Blockchain Initiative or these sorts of things and putting securities on a blockchain, as well as other things. And the example that was given was that case involving the shares, and now the name. Oh, what is it? It is a fruit company. Now,
Dole?
Dole. Thank you, Dole. Yes, it suddenly left my mind, and I was thinking Del Monte, but no, Dole. Yes, where there was I believe the shareholders drove suit, and then people had to bring notice of claims, and there were something like 30% more claims than there were actual shares.
Yep.
And those weren't like fraudulent claims; they were actual claims. And the reason that was given was the structure and how DTCC held, the securities on behalf of holders. And so I just think it is, just exciting and also so interesting that now we have this focus on tokenization, which, by the way, just in the past couple of weeks, the interest from banks in tokenization has skyrocketed, just in terms of like presentations being asked to give and other things like that. But it just makes me think back to that being sort of the rationale for why we need blockchain technology, right?
Yep.
And now we see them getting their own no action letter. So
David and Josh once again proving that her knowledge in this space is encyclopedic. I had forgotten the Dole Delaware blockchain conversation from a few years back. And shout out to Andrea, by the way. It's been too long. She's amazing. And Caitlin Long and all of the folks that have been focused on that for many, many years. I want to wrap up with one other thing, and I don't mean it to be a down note, but there was a court rendering of sentence in this space. The Terra founder was given a prison sentence, and again, look, it's not nice to see anyone go to prison given the world that we operate in. But the truth of the matter is, I feel like the last of the fraudulent things is also being swept away in this space. And as weird as this is going to sound, David, I feel like for the industry and the earnest participants in it, that's a good thing. Am I looking at it wrong?
No, I think it's good to close the chapter on that.
The
cascading effects from that failure and the impact it had on a lot of companies was really hurtful to the industry. So I think it's good to close that chapter. I do think there are a couple of other bad actors that do need to be addressed that are still sort of out in the wild. And I think once they're addressed also, I think we'll kind of close the chapter. But, we also have to remember that some of these frauds are not, this one was more of a crypto fraud, but the issue with SBF wasn't so much a crypto fraud. It was really just using value impermissibly. So it wasn't like that the cryptos on FTX's platform failed or that the platform itself failed. It was just the use of proceeds itself.
Yeah.
So I think that's another thing worth mentioning. I mean, candidly, it would be great to see the principals of 3AC have their day in court.
Wow.
But I think this is a positive step to put the last, malfeasance of the last few years behind us.
Yeah, and Josh, David, I think this is what you both taught me a long time ago, and I forgot which one of you mentioned it, but fraud is fraud. If there weren't crypto involved in FTX, what happened would have still been fraudulent.
Yeah. And I think that was an important thing that we needed to tell people at the time, that this wasn't a failure of crypto platform. It wasn't a failure of specific crypto assets. It was a misuse of customer funds.
Yep. David, Josh, go ahead, Josh. Sorry.
I was just going to say, one of the things, and also Do Kwon, it looks like he is going to also, I think, face charges in South Korea next.
Oh, wow. Okay.
Despite this 15-year sentence. But one of the things that I realize, like, the wheels of justice move slowly sometimes.
Yeah.
It feels to me, I mean, I'm happy to David's point and your point, I'm happy that this is all being put to bed.
Yeah.
But it feels like it's so far after the fact, even though it's only been a couple of years, right? It feels, at least to me, like it's so far in the past that it's like, in my mind, that chapter had already closed.
And so much had happened since then.
Yeah.
Yeah. I think for some of us who are like living through it in the moment and the repercussions for it, Josh, it's still left a little bit of a mark on how we think about things and reacting to them. But I do think that it is good that this day has come, as far as just there needed to be a day of reckoning for this.
Yep.
And I'm glad it's come. And I hope it comes for 3AC principals at some point too, because I think justice needs to be served on that one.
Yep. Josh, David.
Apologies. I realized that may have been insensitive of me to say, like, it was in the past.
No, Josh. It's not at all. Just after I got my LLM in bankruptcy during the Voyager case, I lived it for a couple of years. So no, it's not insensitive at all. It's a learning moment. It's really a teaching moment, because I think there are a lot of lessons that were learned from that. And then I think that, like, all of us as practitioners, have honed some of our sort of views on things after that.
Yeah.
So I think that's the way I think about it.
David, Josh, we've only got a couple of minutes. No, and someone's puppy wants someone's attention. I can hear them in the background. But I just wanted to end us off on sort of a happier note. Christmas rally, is there a Santa rally rather coming, David, Josh, between now and the end of the year? Please tell me yes, because I've got a wife who wants to know.
I don't know. I'm feeling a little grinchy right now, honestly. I don't know. Look, we all do have to remember that outside of crypto, we've had a really solid year.
Yeah.
I am not convinced that we'll end up positive for the year. And with Bitcoin and Ethereum, I think we'll definitely be lower at the end of the year.
Yeah, down 7, almost 8% on the year for Ethereum, down over 3% on BTC. That might be a hard slog. Josh, will the Klayman family office rescue the market and buy in?
Almost certainly not. I think that we can take off the table. I'm not saving the market. Sorry, not this year.
I get it.
But I do have a question for you guys, because I know, Ron, you have been a CEO of a tech company and held very, senior roles for many years. And David, you've been a GC of some of the most prominent crypto companies. And you also have been, I think, an analyst and a trader and an economist.
He's the Renaissance.
All sorts of things. And so this question actually may be unrelated to all of these, but I'm trying to tie it in, which is, I recall hearing sometimes that traders, this might not be true at all, that for tax purposes, sometimes at the end of the year, they try to take all the losses or something like that to offset. So I'm wondering, could that have an effect on whether it's a Grinch or a Santa at the end of the year? Could it be that people want to be a Grinch a little bit?
I mean, it could be. And David, I'd love your opinion. I haven't seen any kind of tax loss harvesting widely across the institutional side of crypto yet, which kind of isn't the best signal, because it makes me wonder, David, if there's a leg down between now and the end of the year when they recoup from even they allocate for even more losses going forward. It's a tough one, Josh, and it's a really good point. But David, tell me if you what you're seeing.
I mean, I don't see tax loss selling in crypto. I think you might see it in equities where,
Definitely.
I think you'll see that where people have had some nice gains this year, and if they had some losers, they may want to take those. I haven't seen it in crypto because I think unless we think this last 2 months has been an extended tax sell-off, everybody got in early.
They usually do it in December. They started in
fair.
October.
That's why you guys are the experts and not me.
We're going to start in October this year, but I still think that's like the OG selling big blocks. So I'm going to say that either the really smart people tax sold in October and front ran everybody, or I don't think we'll see it, or at least I can say with some confidence, I don't think we'll see it in December this year.
Agreed. David, Josh, I'm going to go off script for one last thing, which is an announcement. This might be our last crypto roundup of the year. I might be traveling next Friday. Not sure
How
yet.
dare you?
I know. And I should have let you both know. It's still a tentative, and the Gulfstream may not have Starlink on it. But David, Josh, if it is, let me just say you are both amazing colleagues and co-hosts. And it's such a privilege to be on this with you both and to do everything that we do in our lives together. I truly mean this. And I said this at the holiday party, Josh, and I truly mean it. I learned from both of you every single day, and I'm so grateful. And I just want to thank you both.
Thank you. I feel the same way about both of you guys. And Ron, if you have the chance to travel, if you're able to, you guys should go. So let me not be like, how dare you? Like, I really mean like.
I know you're kidding. And when you're married for 25 years and the boss says we've got to go away or else, the or else is the thing you hear most. So you are both the best. Thank you for everyone in the audience. Thank you so much for joining us. Thank you for a great year. We'll be back early in the new year. If you've got questions for David or Josh or I, email us info@wsba.co. We will leave it there. Happy holidays, everyone. Bye-bye.
Happy holidays.
Happy holidays.